Hello, this is Squander Invest. Today I'll be ranking the best opportunities in the market today. So in today's video, I'll be covering a few things. I'll be covering the earnings so far, ranking the best opportunities in the markets today, as well as some questions that you guys have left in the comment section. So we'll talk about the market rally first. So the markets are having a massive rally today. We're seeing green across the board. So Google up 3%, Nvidia up 2%, Amazon up 5%. You have MasterCard up as well, Berkshire up as well. Netflix up around 6% as well on no news. So this is a very green day across the board after the red day that we had yesterday. So let's talk about the earnings so far. So the first one will be Moody's. So Moody's, they topped their Q1 earnings estimate and they lower their guidance. So for Moody's over here, they beat both their earnings as well as their revenue. So earnings came in higher than expected. Revenue came in higher than expected as well. But the problem in Moody's earnings is they lowered their guidance. So they lowered their guidance because they were citing some sort of tariff uncertainty, which will lead to more economic growth for the country. So they lowered their GDP growth for US from around 1 to 2% to between 0.5 and 1% now. So you are clearly seeing some form of economic slowdown because of the tariffs. And overall, I think Moody's earnings were great. So the ratings went up by around 8% or so, and then revenue went up quite decently as well, around 8%, and then earnings went up by about 13% as well. So for Moody's over here, it is a high quality business that I'm looking to add as well. I'm looking to add into this company. Hopefully it drops a bit more so that it goes to an undervalued range where I can comfortably add into this company. So for this company over here, this is the valuation that I did. This is a DCF calculation over the next 10 years. So for Moody's over here, the projected growth that I have for it is around a 12% until 2028, because the debt wall maturity is going to increase all the way until 2028, pick out at 2028, and then start tapering off from there. So I do expect that Moody's will have a lot of free cash flow growth all the way up till 2028, and that's why I'm putting it at around 12%. And then after that, it will taper off to around 10% or so. So for Moody's over here, assuming a 25 times price to free cash flow for this company, which is quite reasonable given the quality of the business. The intrinsic value for this company is around $380. So it's currently trading now at around $420, signaling a slight overvaluation in terms of its intrinsic value. So hopefully it gets somewhere near to this point so that I can add to it. But I'm not in a hurry to add to Moody's. It is a high quality business, but the valuation is a bit too steep right now. Next company is MSCI. So MSCI over here, they topped their Q1 earnings and revenue, they beat it as well. So for MSCI over here, the reaction was a bit muted. It's up around 0.27% or so. So for this company over here, they beat their earnings, they beat their revenue as well. And overall, if you were to look at the entire earnings report, the earnings report was great. So earnings, EPS came in 15% year on year, revenue came in 10% year on year, net income came in 12% year on year, and overall it's just a high quality, predictable business just doing whatever it does every single quarter. So for MSCI over here, this is the valuation that I have for it. So assuming a 12% free cash flow growth again, similar to Moody's, and tapering off to around a 10%. So for MSCI over here, I do think they are much more resilient in terms of its revenue and free cash flow growth as compared to Moody's, because MSCI, what they do is they tap on your inflows into all your different ETFs and your assets under management. And as your assets under management grow, then MSCI will likely be able to grow a lot more durably, a lot more reliably than Moody's, which is more reliant on the credit market. So for MSCI over here, assuming a 25 times price to free cash flow as well, a 47% payout ratio, the intrinsic value for it is at around a $560. So currently now it's trading at around a $525 to $530. So it's around between a 5 and 10% undervalued range. I would like for it to drop all the way until 450. That will be where I'll be initiating quite a substantial amount of my capital into MSCI. This company is a high quality business and it will likely stay here for the next 10, 20 years or so, because it simply just relies on its brand. So for MSCI and Moody's over here, these are two juggernauts with extremely high quality business, but with a high valuation as well. So these are two of the highest quality compounders up there, and that is my portfolio style. So I want to own high quality compounding machines instead of sacrificing quality for valuation. So for example, let's say PayPal and Visa, I rather own Visa as compared to PayPal. PayPal is half the valuation of Visa, but Visa is much more durable. It's the high quality business, and it's the business that won't be disrupted by all your different other competitors like Stripe, because they'll still have to go through Visa. So for my portfolio setup, I want to own 10 high quality business. That's about it. I don't want to own 20, 30, 40 companies inside my portfolio. I want 10 high quality businesses that can just compound intrinsic value over the next 10 years, 20 years, and so on. So I'll be talking about some of the best opportunities right now. So among the Mac 7 companies, I still think that the best opportunities are Google as well as Amazon. Google for obvious reasons because the valuation just makes a lot of sense. Whereas for Amazon, it's similar as well. It's a valuation story. So for Amazon over here, it's currently trading at a price to operating cash flow of around 15 times. That is the lowest point in terms of its history. And for Amazon over here, although the tariffs will definitely impact Amazon's business, if you are to look into the actual numbers itself, only 4 billion out of the 74 billion operating income of Amazon is attributed to the online retail segment, and another 15 billion is your third party seller services. So if you're to have a 25% haircut in terms of the operating income from those two segments, this company is still extremely durable. You will still likely see a lot more growth in AWS. So for me, Amazon is a strong buy as well. Same thing for Microsoft. I think Microsoft should be somewhere between the strong buy and the buy as well. This company is just a high quality business that won't be impacted by tariffs. Unless China starts imposing all the different digital tariffs, then companies like Microsoft will still remain strong, durable, and compound over time despite this uncertainty in the markets today. Ones that are in the sell will be Apple as well as Tesla. Apple because it doesn't have enough growth. You're seeing Warren Buffett selling it already. And then Tesla simply because the fundamentals and the stock price are detached. The shareholders are more concerned with the actual story of the business rather than the fundamentals, and that's why I think for me I won't be touching Tesla at all. It's a company that is out of my zone of competence, out of my actual philosophy and psychology in terms of my investing. As for companies outside of the Mac 7, for all your different tech companies, for me, I think the strong buys are ASML as well as TSMC. TSMC is for valuation, similar for ASML as well. ASML has an absolute monopoly in the lithography segment, and it's a company that is trading at extremely low valuation now. So over the past 5-10 years or so, ASML is currently trading at one of its lowest valuation points ever since it came out of the EUV machine. So if you have to look back at from 2019 onwards all the way till now, which was when it started creating your EUV machines, this company is trading at the lowest valuation. So for me, it's simple. ASML, the whole world needs it. So it's a strong buy for me. Same thing for TSMC, but for TSMC, you will always have the China overhang, and that's why I would rather buy ASML as compared to TSMC, although they are both high quality businesses. As for the companies in the whole category, I have Uber over here. Uber is not extremely cheap. It's around 50 times price to real free cash flow. Netflix is not cheap as well. This company is extremely durable, yes, but there is innovation risk, there is valuation risk as well. So for me, Netflix is in the whole category. It's not in the sell because it's a high quality business, but for me, it's in the whole category. Salesforce as well. I don't understand the more of the business. The company is slowing in growth. Company has single digit revenue growth and expected to grow free cash flow at around 10% as well. 10% for a company that is trading at around 30 times price to free cash flow adjusted for stock-based comp. I don't think it is extremely cheap, and that's why it's in a whole category. For Adobe over here, it's a company that is cheap. It's an enterprise software company that is cheap, but for me, it faces too much competition. So it's in a whole category. I wouldn't necessarily sell it because the valuation makes sense right now. But for me, I wouldn't buy it as well. As for your financials, three companies over here, American Express, Visa, MasterCard. For me, my favorite out of these three will be Visa as well as MasterCard. So Visa simply because it is the most established one out of these three. MasterCard because it has a similar growth story as Visa and it's higher growing than Visa and it operates in sort of like a duopoly Visa as well. For American Express, the problem with this business is it has credit risk. So it is an issuer, it is a bank, it is a payment processor as well. So it is sort of like vertically integrated. But the problem with this is there will be some sort of credit risk. So when there's a credit event, American Express will likely be hit as well. So for me, I think American Express is the one that I'll avoid out of this list. But if you're owning all three companies, I think you can safely say that these are three high quality financial companies that you can hold for the next 10 years or so. And they will still likely be around in 10 years' time. As for healthcare, the two companies that I'm looking at right now, the two best opportunities in the market right now will be United Health as well as Novo Nordisk. United Health, it dropped around 20% or so last week. Now it's around 30% from a week ago. So for United Health over here, it's simply just a durable business. If you're to look at the fundamentals of this business, it has grown massively over the past few years amidst of all this regulation and uncertainty. And even with the Luigi thing that happened last year, this company still managed to grow revenue at around 10% or so. So for United Health, I think it's a high quality business in terms of its fundamentals. Don't get me wrong, it's not in an industry that I like. It's in the healthcare industry. Healthcare is normally quite regulated, but for me, United Health is signaling a decent opportunity right now for you to enter into this company. Next one is Novo Nordisk. Novo Nordisk is the company that sells your Ozempic drug. So for Novo Nordisk over here, I think it's similar to United Health. It's a valuation story as well. This company over here is trading at around a 17 times price to earnings and growing at around 17% as well. So when your PEG is less than 1, that is when your companies are extremely cheap. And for Novo Nordisk over here, it will likely ride on the wave of your weight loss drug industry, just going up 15% all the way until 2030 or so. So for Novo Nordisk, if you think that they can hold the market share that they have in your weight loss drug, then I think it is an incredible buy right now. But for me, I don't understand the business enough, so I'm avoiding it for now unless it gets really dirt cheap. So I'll be going through some questions as well. First question is from this guy. So I don't know if you've done an analysis on Berkshire Hathaway, but would love to know your thoughts. I find it's a very hard company to value, especially considering Buffett's age and how it will impact the company when he dies. There are also many different private businesses under Berkshire with business models that I'm not familiar with. Do you think that one can own Berkshire long term with the conviction that Warren Buffett is the greatest investor in history? So I think for a Berkshire over here, Berkshire is a company that is built to last forever. So if you're to look at the cash flow of this company is just piling cash. It has around 5% of the entire US T-bills that is out there. So this company is a juggernaut. It is not going to collapse even if Buffett passes away, if he does in the future. And for Berkshire over here, they have many high quality businesses under their name. So they have See's Candies, they have BNSL, the railway company, and then they have all your other different insurance industry under its name as well as some of the Japanese companies that Warren Buffett owns in his portfolio as well, which is not publicly shown to the US investors. So for Berkshire over here, I think it's a company that you can value using price to book. That is what the management does. They evaluate using price to book. Or you can adjust the earnings and go and calculate the price to earnings. I believe the price to earnings now is around 23 times if you were to adjust it for all the different equity gains and all the different operation gains and all that. So for Berkshire over here, I think it's a company that is built to not die. And Warren Buffett, even if he passes away, he will still be a legacy investor that will hold on to this Berkshire brand over here. So I don't see anything happening substantially to Berkshire unless Berkshire comes into the hands of some random investor that doesn't know anything. Next one, thoughts on MicroStrategy. So MicroStrategy over here is the proxy of your Bitcoin. So you know my thoughts about Bitcoin, I'm sure. So for Bitcoin, I don't think it's an actual asset, meaning to say it is not a cash flow asset, and I wouldn't touch it at all. Same thing for gold. So this is what Warren Buffett had to say about Bitcoin.
I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said for a 1% interest in all the farmland in the United States, pay our group. Well, let's see, 10 million. Pay us this bargain price, $25 billion. I'll write you a check this afternoon. $25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer me a 1% interest, so I'll have a 1% in all the apartment houses in the country, and you want whatever it may be for it, another 25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was, 15 years ago. If I've got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you?
So yeah, these are my thoughts about Bitcoin. I wouldn't touch it. Warren Buffett is not going to touch it. So yeah, I'm not touching it as well. Next one. So next one over here, any thoughts on Constellation Energy? Very undervalued and has a price earnings of around 18 times. So for me, I think your energy stocks then avoid for me simply because I don't understand enough of those stocks and they're extremely cyclical. So in an economic downturn, you can see this crashing all the way to negative. So in COVID, for example, your energy cost itself, it went to around negative 30 because the cost of production actually came in a lot more than the actual selling price because the demand was so low because everyone was like sort of like indoors. So yeah, Constellation Energy, I believe it is a oil company or some sort of data center company. So for me, I wouldn't touch it at all. I don't understand the oil industry. And yeah, unless you really go and understand it, you can adjust the earnings based on the oil prices, then I wouldn't touch this company. So the next one over here is from this guy. He asked, how about gold? So again, similar to Bitcoin, gold is sort of like an asset that won't produce you cash flow. It is an asset that is just sitting down there. Yes, it is backed by governments, and that's why it is so highly priced. But for me, gold is not something that is able to produce me incremental returns in terms of cash flows and all that over the next few years or so. For me, I wouldn't touch gold at all. It could be a hedge, but I'm not looking to hedge my portfolio at all. So hopefully you guys have found this one useful and invest safe.